Hello and welcome to Forex Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be discussing Secret Techniques for Profitable Trading Part 1. Profitable Forex trading is an elusive goal for many traders. According to most statistics, over 75% of traders lose money. This happens for several reasons. There are well-known causes of this unfortunate outcome. Most traders' accounts get blown because they risk too much and lose everything when the market turns against them. Another source of failure is their psychological bias to let losses grow and cut their profits too short. But today we will focus on one key factor of how to assess entries and exits properly. The state of a market. Many people classify market action into 6 states: bull, bear, sideways with high or low volatility, and although this is usually correct, it does not offer enough simplicity to make decisions. The best way to look at the market action is similar to the Elliott wave theory states. Elliott stated that the market had impulsive phases and corrections of this primary impulse. We do not need to be a genius to see that it is logical. Waves need to swing for it to form. But impulses and corrections have different properties. What works on one does not work on the other. Thus, the secret to master trades is to 1. Assess the state of which the market is on, and 2. Apply the proper tools to the entries and exits. Impulse properties. Impulses are characterized by directional movement, bull or bear. We can see a steady price action towards a new equilibrium. As impulses are created by an imbalance between supply and demand, the volatility on impulses is directional, and the tools to apply are moving averages and a superior form of them, such as an instant trend, MAMA, MESA, and similars. Chart 1. In Chart 1, we show Bitcoin moving in its latest impulsive phase, although we can also see a glimpse of a corrective structure. The main idea here is to follow the trend. The chart shows a ribbon formed by Euler's instant trend, an advanced indicator freely available on TradingView, but also on MT4 and MT5 platforms. We see that the indicator is right at delivering timely entries and exits. The chart also shows its 50 and 200 simple moving averages, heading up to supporting the trend. We can see that the touching of the 50 SMA line could be used as well to enter and add to the position, although the instant trend line seems to lead to the 50 SMA. TradingView's instant trendline indicator colorizes the candle's body so that the upward phase can be spotted with ease. Corrective properties. Corrective phases come at the end of an impulse. We have to realize that impulses come from a lack of equilibrium between buyers and sellers due to actions to find their new fair value. The fair price is unknown, thus usually the impulse creates an overbought or oversold conditions. When some savvy traders spot this, they start to unload their positions in a profit-taking activity. This in turn lowers the price to a level where it finds new buyers. The price then moves up, but the psychology of traders who lost near the top makes more selling pressure ahead of this level. This lowers the price and creates a cyclic path. The main characteristics of the corrective phases is the cyclic characteristics, where the main feature of impulses is their lacking of declining or cycles. Since the cycle is the main component of corrections, the best way to time them is by using an oscillator, such as the stochastic RSI or advanced wave oscillator. If you are price action orientated, you may use support and resistance levels and breakouts to spot the right entries and exits. Chart 2. As an example, we have Chart 2, the corrective phase of Bitcoin that started after a move up to $15,000 from the last consolidation of $13,500. The image shows the stochastic oscillator, third curve, and 2 advanced oscillators by the innovator of this century, John Ehlers. The stochastic CCI and the autocorrelation angle are also used here. These 2 can also be found on TradingView.com and MT4 and MT5 platforms. We see that Ehlers' stochastic CCI, second curve following the price, can precisely time the cycles on the chart with razor-sharp precision. However, the stochastic oscillator is not far behind and can be used to profit from these cycles and confirm reversal candles. The bottom image shows the autocorrelation angles indicator. Autocorrelation is an advanced way to spot short-term memory of the markets. A sharp move on this angle will show a transition from bear to bullish and bullish to bearish phases. This indicator is harder to handle though. Chart 3. This is a Bitcoin 1-hour chart corrective phase with an even better sine wave indicator. To conclude, markets have 2 phases, impulse and corrective. Each needs the right tools to find suitable entries and exits. Traders need to spot the first state of the market. If impulsive, apply averages or advanced versions of moving averages and follow the trend. If corrective, use oscillators to spot turning points. Don't be conformist, look for advanced tools and learn how to use them. They will give you a better edge. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.